Hello and welcome everyone to this weekly market recap for the week ending Wednesday, February 5th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com. It's a pleasure to be with all of you again this week. Still got a lot of sideways action going on in the market. We've been kind of pushing a little bit to the upside, which is pretty good news, but we got a big jobs report coming out on Friday of this week. That's going to be very interesting because I am seeing some signals that maybe the economy isn't that strong, which would really put an interesting twist on the market because right now, really what the Fed has counted on is the economy remaining very resilient. That's allowed them to leave interest rates higher for longer to fight any impacts of inflation. But I don't know. I'm just seeing some signs, and we're going to talk about that a little bit during the show. A couple of different instances that just not quite sure the story that the market's trying to tell us. But one of the stories could be that the economy may not be as strong as we think it is. Anyhow, let's first go in and let's take a look at what's going on over the course of last week. Just a reminder to everyone, because I am doing a weekly review and it's in the middle of the week. Everything that I look at is going to be from Wednesday's close last week through Wednesday's close of this week. So it's a little bit of an odd week, if you will. But anyhow, just wanted to point that out, make sure everyone is on the same page. So if we look back over the last week, the Russell 2000 has actually shown the most strength among the indices that I like to take a look at. NASDAQ 100 is next. S&P 400 mid-cap is next. Then the S&P 500, of course, Dow Jones. And look at the one group that continues to struggle. Now, this is one of those signs that, I keep waiting for the transports. They seem like they're ready to break out and then they don't, and they go back down. And this was another example this past week over the last 5 trading days where all of our major indices are up and transports are down 3%. Now, transports only go up for one reason. They go up either because the economy is strengthening and more goods are being shipped, or because Wall Street is anticipating a stronger economy where we will have more goods shipped. Well, over the last week, doesn't seem like either one is really working on the transport group because, again, we went down 3%. That was a little bit more than 3%, over 500 points. Now, we've been in this range where we've been holding support at about 15,750. We're at 16,137. So not all is lost. But when you see all the other indices bouncing back and transport's not, it's just not a good signal in my book. So I don't need transportation stocks to lead the market, but I do need them to participate. If you go back and you look at when the S&P 500 has done its best, and I'm talking about going back many, many years, the S&P does its best when transportation stocks are rising. They don't have to lead the market, but they need to be rising because that is a signal of a strengthening economy, or at least an economy that it's expected to strengthen. As those stocks get bought up and they start rising, that's generally a good sign for our economy. So that's just point one I wanted to make this week, is I'm just not sure exactly what's going on with the transports. We'll look at their price chart in just a minute. So next up, let's look at the key sectors. Now, we've seen the market struggle. It's been DeepSeek, interest rates, and tariffs. Oh my, getting back to the Wizard of Oz. But it just seems like there's something that's been driving the market crazy of late. And those were 3. We had the Fed meeting last week. We had DeepSeek a little over a week ago with all the mess that created as far as a lot of the AI stocks go. And then the tariffs over the weekend. It was talked about that Canada, Mexico, China were going to get hit with tariffs. We opened down again on Monday morning. Second week in a row we've done that. But we've been bouncing back. But when I look at this, while we're consolidating, I've talked about maybe this top, we might be in this topping process. Well, one of the things that worries me is when we start to bounce back, 9 of the 11 groups were up last week, over the past week. When I say groups, I'm talking about sectors. But look at the top 3. Real estate, utilities, healthcare. 3 defensive groups. are helping to lead the market back to the upside. That's not what we want to see. Meanwhile, consumer discretionary and industrials, two more aggressive groups, are the two groups that did not perform well. So the rotation that's taking place is another thing that's kind of throwing a little bit of a sign out there that, hey, maybe things aren't quite as good as they appear. Now, this is just a 1 week look. So if we continue this over another week or maybe over another week, that's going to start to become problematic. I don't mind when these defensive groups lead when the market's going down, but when the market's going up and it's trying to rally back and it's trying to move to all-time highs, we don't want real estate, utilities, and healthcare leading the advance. That was exactly what was leading the advance at the beginning of 2022 before we had a cyclical bear market. So we want to be careful there. We want to make sure which technology took it on the chin this morning again, because last night after hours, we had AMD and we had Alphabet or Google, both we had negative reactions to their earnings reports. So they both gapped down today. We did see AMD come back, but it was down at a 52-week low. We saw Google come back a little bit, but not nearly as much as we saw with AMD. So anyway, this is just another little warning sign. Nothing, we haven't broken down. Remember, the number one indicator out there is price volume. And if you look at what's going on right now, let's pull up these charts, take a look here. The S&P 500 this week, after gapping down Monday as a result of the tariffs, we've come back and we've been closing at or near the highs each day this week. That's a good thing. Look at the AD line. AD line's breaking out to new highs. This is awesome for the longer term. And I keep saying this is going to be a good year. I'm convinced of that. I'm just talking about the short term. What might happen between now and the end of this quarter? That's kind of where I'm looking at, where I've been focused. So from a trading perspective, short-term trading, if you're a short-term momentum trader, I think there are signs out there that should at least make you think, do I want to get a normal size position of this stock? Maybe I should do a little smaller position. Do I want to sell calls against my position? Kind of hedge a little bit. Probably wouldn't be a bad idea. As we struggle in this push back to new highs or close to new highs, that's kind of some of the things I'd be thinking about, because this doesn't look like an all-out blitz to the upside, with aggressive groups piling on and areas just breaking out. Semiconductors have been under pressure for a while, although today's action in the semiconductors actually wasn't too bad. But as I look at this, I see the AD line going up, and I think that's a really good positive for the long term. That gives me even more bullish feelings about how we're going to end 2025. But where we are now until the end of 2025, we got a lot of stuff in between. And that's where I'm a little bit more nervous, especially, like I said, over the next few weeks to couple months. And we'll see how it plays out. I might be wrong. Maybe these warning signs are nothing more than, false signals and market just keeps going up. That's possible. But if we start to turn lower and we start breaking down in some key areas, that's when I would be starting to grow a little bit more concerned because of some of these other bearish signals that are surfacing. NASDAQ 100, you can see we topped a little over 22,000, came down in early January, put in a low around 20,500, and we've just simply been going in between, moving back and forth. A lot of hollow candles, though. Look at the AD line, very strong. All of this back and forth action over the last month and a half has done nothing to the AD line. So in other words, we continue to finish stronger than we start most days. And that's what's carrying that AD line higher. Usually strong finishes in the afternoon are generally a good sign for the sustainability of the market going higher. Again, any issues that I have are very short-term in nature. Small caps. I like what small caps are doing after gapping down on Monday and breaking down below this near-term trading range from about 225 to 230. We gapped down. We were down to 220, 221. And for 3 days now, we've been showing tremendous buying. back in. Volume, though, the last 2 days, if you look down below, very light compared to the gap downs and the selling that we saw previous to that. So it's not all perfect, but I do like the fact that we bounced back. Can we get through 230 and can we sustain it? We couldn't do it over the last 2 or 3 weeks. Will this be will this one be different? We're back over 229. I saw in after hours, small caps were up just a little bit. Maybe we're going to threaten that 230 level at the open tomorrow. But do we break out? That would be a short-term breakout. That would be nice. But what if we gap up and we fail and we see selling all day? Or what happens if we make a breakout tomorrow, finish 231, 232, and then the jobs report comes out on Friday and shocks the world, shows that maybe things aren't quite as strong as we think they are. How's the market going to react to that? I don't know. I mean, and this is getting really tricky here because the Fed is putting us back on inflation alert. But if you've got inflation alert going at the same time, you got economic problems surfacing and building, which one is the Fed going to attack? Can't go after both of them. Inflation, you're supposed to raise rates or at least hold them steady. Make sure that inflation doesn't get any further out of control, because that's kind of what they are trying to let us feel, is that it may not be under control just yet. So you got that one side of the Fed equation. The other side, if it's the economy and the economy's starting to weaken, you're supposed to cut rates. So I feel like, I'm walking like an Egyptian or something here. Which way is it going to go? Like I said, Friday could be a very interesting morning, because if we come up way short of the expected jobs number, then focus is going to start to turn to our economy. And then what happens? Does the Fed reverse again? I mean, they're master of waffling of late. Are they going to reverse again and say, well, we were just kidding. Inflation, isn't that bad. We're going to go back now and start working on the economy. We're thinking about cutting rates. Is that going to come back into focus? Or do they stick with that inflation issue? If they stick with the inflation issue and it looks like the economy is weakening, we got problems, because you can't fight the economy if you're still trying to fight inflation. Anyway, that's going to be interesting later in the week. Let's keep rolling here. There's the transport. So here over the last week and a half, I mean, you can see another big drop in transports. And we're very close to key area of support down at 15,750, much closer to that than we are to the 17,750 area, which was the recent high back at the end of November. So I don't really know exactly what's going to happen here. I don't like the AD line here on the transports. I think this is a sign that the economy is not where we want it to be. I think, seeing the market move back up and rotating more into defensive groups, not really a good sign either. But if you're just strictly looking at the price action of the major indices, you haven't really seen any major breakdowns just yet. So, like I said, it's all going to be very interesting as we go forward. This is a sign, though, that I got a little problems too, because here we've got the yields coming down. So there's a good thing and a bad thing here with this TNX chart, with yields coming back down. We fell 9 basis points today, back to 4.42%. We're now 40 basis points away from that recent high. So what is the bond market telling us? Usually, if inflation was still a threat, bond investors would require a higher yield. So you would see you wouldn't want to be holding bonds if you're worried about inflation. So the fact that the folks are buying bonds and sending the yield lower makes me think that inflation isn't a problem, but the Fed's trying to tell us otherwise. So which one's right? If the Treasury market's right and the yields are going down because inflation's under control and getting more and more folks worried about the economy, that puts a whole different spin on things. I mean, like I said, I don't know how this is all going to play out, but I use the charts to try and tell me the story, to give me the news, to give me the truth of what's going on. Not the media. I don't follow the media. I could care less. Most of the media outlets are just getting regurgitated stories. They didn't do any research. They didn't follow up on anything. They're just posting something that will give them views. Following the charts will tell you where's the money going. That's what I want to know, because that tells me a lot more than the media outlets. So, but looking at this and seeing the yield come down, one group that should benefit from this, it wasn't that long ago with yields going up, home construction was getting hammered to the downside. And now we got yields coming down. So home construction should be flying, right? Let's look at home construction. So when yields were going up, there's your big drop in home construction. When 10-year treasury yields going up, that's a kind of a benchmark for mortgage rates. It means mortgage rates are going up. That's not good for home construction. So home construction goes down. Then we start to see the 10-year treasury yield come down, which is good for home construction. I even pointed this out a month ago. I said, this is a group that could do really well when rates start coming down. And they did for about a week. And now the yields are still going down. And today, with the yields falling, the 10-year treasury yield falling 9 basis points, that's a big drop. The home construction group fell 0.02. It was flat on the day. It was up early, and then it sold off with yields falling. I don't know what this is saying, but again, if yields are coming down and that doesn't lift home construction, then maybe we got bigger economic problems than we think. I don't know. We'll see. All right. I wanted to show you something that I think is one of the most useful features at Stockcharts for me. I've been a longtime user and member at Stockcharts, and you don't get this particular feature unless you're a member. So if you're just using the free Stockcharts, hey, that's great if that's all you need. But think about this for a second. So here's a stock Cloudflare, ticker symbol NET, N-E-T, that's been going straight up. Now, when I look at a chart like this, I don't like to chase. So I would look at this and say, well, maybe if this stock were to pull back and get down to that 20-day, which is at 128 right now, or even the recent price low where we dropped down to 130, that would be an area. If we start approaching that area, I would be more interested in net. But if you put it on a watch list, you have to look at it every single day. Well, one of the features at Stockcharts, it's pretty cool. If you go to your dashboard, first click on this gears and make sure you have scans and alerts checked, because I want to show you price alerts. So that is checked on my dashboard. So I can go down here and here's your alerts. Now, right before the show, I set an alert for Cloudflare or net. And so if we pull that up, I just use the basic price alert, put in the symbol, and I said, if net crosses below 132, I want to be notified. And they give you notification types. So you can get an email if you're at work. You could get a text message on your phone. Again, if you're away from your computer, not really following the market, a text message. When Cloudflare goes below 132, you should get a text message if you check that off. Now, I'm almost always on my computer, so I like the site notification. That's just a banner that'll come up right at the top of your screen. You can't miss it. So when that crosses, that will remind me that, hey, oh, that's right, Cloudflare. Let me see if that's at a good buy point here. So I just want to point this out because this is just one of the many features. I normally will only do it with a few stocks when I do it, but it is a great time saver, and it's just a reminder. And, you get to be my age, you can't remember anything. So, I'll forget to go back and look at net. I'll forget to put it in a chart list. So having this reminder is just another way so I don't miss it if it does pull back close to an area where I might think about buying the stock. And it'll save you almost 10% on the stock price. It was at almost 145. So down to 130 would be 10% off current price. So it's a way to keep track and try and buy your stocks a little bit cheaper. All right, I want to go over to EarningsBeats.com for a minute. So if you go over to EarningsBeats.com and scroll down, we have a free newsletter. Always like to point this out. We have tens of thousands of people who have joined us. There's no credit card required. You can unsubscribe at any time. Twice a week, I'm going to give you either a chart, maybe a chart that you might be interested in trading, or it could be an educational tip. And so if you just put your name and email address in here, hit that subscribe button, you'll be automatically subscribed. And again, you can unsubscribe at any time. You're not going to hurt my feelings. We do this to give back to the community. If you don't want it, that's fine. But I think it's a pretty cool newsletter, and most of the people that sign up keep it going back a long, long time. I want to give you the chart that I put in the EB Digest on Monday, just 2 days ago. So it was Allegiant Travel. And so zeroing in over here on the right side of this chart, you can see we've been in a lengthy uptrend. But on Friday of last week, we actually set a new high, 52-week high, but it came with a negative divergence and a failure. You see that false move to the upside, leaving that tail above prior highs and then reversing back down, almost like an upside down or an inverted hammer? That's a reversing candle. And that, along with a negative divergence, Monday morning I sent this out and I said, this is a stock that easily, it closed at 102 on Friday. I said, this is a stock I could see going down to 90 pretty quick. Well, I was wrong because it went down to 80 pretty quick. Went down in 3 days. Now, it did have earnings coming out, and I didn't look to see what the earnings were. I don't know if they beat or didn't, but the stock was priced for perfection. So even if they beat, was probably an opportunity to take your money. Buy on rumor, sell on news is what we see a lot of times in the market, and that's what we saw here this week. So it's charts like that. So if you think that kind of education will help you, then you should subscribe to our newsletter. All right. Just a few more things here, a couple things actually. I want to go through some of the strong earnings reports that I've seen so far. So here you can see CLS. Look at this. This was from the DeepSeek news. This is an AI stock that went from $130 in the middle of the week prior to DeepSeek to going down to $86 or $87 when that announcement came out, that first day, last Monday. Look at where it is now. You think there's not manipulation in the market? Stock came out with its earnings report and it has exploded, breaking out the new highs. Now, I'm not going to go through each individual chart, but I'll just show you a few of these that I think are worth keeping track of. These are companies that have come out with their earnings and the market has loved them. Next up, we got Brinker International, EAT. You can see again, big move to the upside. Team Atlassian Corp, big breakout, continuing to move higher. Looks good. Logitech, LOGI, another one. This one's testing overhead resistance from probably about 8 or 9 months ago, but the overall uptrend right now is clear. Learn, this is Stride. I call it Learn, LRN. I think that was their old name. But anyway, Stride, great move up. Needs a pullback, but it's been a great ride there. Next, Starbucks, Old Faithful. I work a lot at Starbucks, got a little favoritism there going on. Plus, Stockcharts is out in the Washington area near the home of Starbucks. So one of those, it's Costco, Starbucks, some of my favorites are out there. Starbucks making nice breakout. Still not to an all-time high, but getting close. I think that's somewhere between 115 and 120. Another Washington company, I believe F5 Networks is out in Seattle, Washington. Big gap up there. Looks like it's starting to turn back up again. Breakout wouldn't surprise me there. JP Morgan, one of the banks, probably one of the better banks in terms of their report. They absolutely blew away earnings a few weeks ago. Still continuing to move up. Great AD line. MRCY, which is Mercury Systems, big gap up there. We did come back down off of the gap up, but this was up $10 or well over 20%, close to 25% at the open on Wednesday before it pulled back a little bit. We might see a little short-term movement to the downside, but I really like that gap up there with, if you pull back here, you can see the massive increase in volume as well. PLTR, Palantir, boom, AD line going up. Another big breakout. What else is to be said there? CRTO, you can see making this big gap up here after earnings. Still has some overhead resistance to clear, but definitely it was a nice break. Spotify, big report. big reaction. Love this one. But let me stop all the good news here because after hours, I'm going to show you some of these companies though. These were the prices right before I started recording. So some of them may have changed. They certainly may change before the Thursday open. But I want to just show you some of these. There's Qualcomm reporting after hours down 4.5%. ARM Holdings down 6.5% after hours. MicroStrategy, just down a couple bucks. That's not too bad. Ford Motor, is this company ever going to show any strength? Right now, it is up, it's down more than 5% after hours. Corpay, CPAY, down 4.6%. These are all companies reporting after hours today. Molina Healthcare, down almost 10%. Align Technology, down 5%. Skyworks Solutions, down 23%. It just goes on and on. So not a very good list of earnings this afternoon, but none of these stocks would I call market moving stocks. So we'll see how that goes tomorrow. Anyhow, for those of you that would like to follow me at EarningsBeats, we've got a nice slide up. You can scan that QR code. That'll take you to a landing page on your phone where you can check out different ways to catch us at EarningsBeats. If you like our style and our strategy and our approach to the market, then I think that would certainly give you some ideas of where to go to find some more information on us. All right, well, that's it. Another week, in the books. We've had some really good earnings reports come out. Last week, we had a couple of the Mag 7 stocks come out. Some were a little bit better than others. We've seen really good reaction in Meta platforms, not so much in Microsoft or Apple. Apple gapped up and then sold off. But overall, I think earnings have come in pretty strong this season, notwithstanding the ones I went over tonight. So we'll see how it all plays out. But I think that jobs report's going to be big on Friday. And again, watch leadership. If the market keeps going up, you want to see those aggressive stocks start to lead. If they don't, to me, the warning signs are just getting bigger. Anyway, have a great rest of your week this week. Enjoy your weekend, and I'll see you next Wednesday. Have a great week, everybody. Happy trading.